Hi, I'm Mary Buffett, and I was married to Warren Buffett's son, Warren Buffett, the greatest investor of all time, for many years. We have 2 children, and I got a chance to be around Warren like no one else has. So I'm going to be talking about some of his basic investment techniques, but also techniques that I've learned over the years using those basic techniques. One of the things that they wanted me to talk about was the liquidity trap. And a liquidity trap is when monetary policy becomes ineffective due to the very low interest rates that we have now, combined with consumers who prefer to save their money in higher yielding bonds or other investments. So that's really what a liquidity trap is, plain and simple. It's not that difficult. I wanted to talk about not only that, but also give you some ideas about investing, because that's what this is all about, whether it's investing in bonds, whether it's, the liquidity trap, so many other things. So I wanted to tell you a couple of things first. Number one, you don't have to have a lot of money to be an investor. And the only thing you really do need to be an investor is to learn the language. And that's important because certain simple things like you hear PE ratios, which are price per earnings ratio, mean something. And many other things mean important things when you're looking at a balance sheet, for instance, how much a company is earning, how their earnings have been over a long period of time. These are the things that I look at when I'm interested in a company. And most people are always saying, well, what do I invest in? What company do I invest in? And the first thing I want to tell you is invest in companies that you understand, that you know. For instance, at one point I was cooking in my kitchen and I was making Jell-O, and I thought, I wonder who owns Jell-O, and you look it up, you can look it up easily on the internet, almost any company. And then once you get that company on the internet, you can read about it. You can read what the head of the company is talking about doing in the future. You can look at what they've done in the past. You can look at a balance sheet. And on that balance sheet, in many of my 8 books, we talk about things like what to look for. One of the books is interpretations of financial statements, and that gives you an actual idea of what to look at on a financial statement that will give you an idea of what the company has done, what it's doing, and what it will most likely do in the future based on what it's done in the past. And those are the things that I think people are really interested in learning about. The liquidity trap is simply a contradictory economic situation in which interest rates are very low and saving rates are high, rendering money policy ineffective. And so it's not what I would consider a financial point of view that I really look at. I know when financial rates, interest rates are low. I know when they're high. We all do. So that's what the liquidity trap means, is that people are not putting their money into companies, they're saving it, bottom line. So back to investing. So as I said, it's really important that you understand and you know a company, or at least something about a company that you're going to invest in, because it makes sense. You know, I don't invest in companies in the, I didn't invest in companies in the technology world because I didn't understand technology. But what I did understand was things like Jello and things like, you know, things that I use in my home every day. For instance, one of the products I remember when I moved, I was using WD-40 all the time. I mean, we always do, right? And I thought about it and I was like, I wonder if WD-40 is listed. And sure enough, it is. I should have bought it then because it wasn't as expensive as it is now, and it's continued to have a very nice growth. But those are the kinds of things that I want people to think about when they're talking and thinking about investing. It's just like, that's investing in yourself first, learning the language of investing, what those words really mean, and then studying. And studying doesn't mean that you have to go to classes. There are so many books out there, mine included, that make it fairly simple about how to invest, what to look for in a company, and what to look for in a company's balance sheet, because that tells you what they've been doing for the last 10 years. I like to look at 10 years because that's a good amount of time. And you can see what you want is you want their earnings to slowly but surely have gone up over a period of time. You want to see if they have a lot of debt, which you don't want. Let's say you don't want them to have 5 times more debt than they're earning, because that's just not a good thing for any of us. Which reminds me, one of the most important things we all can do as investors before we invest is get rid of debt. Debt is a really, really horrible thing. Even Warren once said, you know, if I was paying 18% on debt, how would I make money? You know, even if I had a company that was giving me 18%, I'm at 0. So you want to get rid of your debt, your credit cards, try and pay cash. I know it's hard, but put a little bit away, and put a little bit away every month. I do anytime I get money, just for investing. And then learn about the companies that you're interested in investing so that you can understand what they do and buy them at the right price. And that's the real bottom line. Is, as women, we know we want to buy a Chanel suit or something, cashmere sweater on sale. We don't want to pay the price, the retail price. So it's the same thing with investing in companies. You want to try to invest in a company when the stock, the company, is at a low point. And that can be for a number of reasons. Of course, the entire market goes down. When the entire Standard & Poor's market, NASDAQ, whatever, is going down, everything is going down. All the different companies are going to be at a lower price because it's down. Another thing that can happen is a company, I'm trying to think of one, but a company that may have one problem. Maybe something goes wrong with one of their products and their stock goes down, and you'd be surprised that people will sell it because of that. And that's just the time to buy it. If you know that the company is a good company, you've looked at the 10 years of earnings, you've read about the company, That's the main thing. The main thing is educate yourself. That is the most important thing that you can do, is educating yourself. What else can I tell you about investing? Investing is something that you generally do with extra money. In other words, excuse me. In other words, you don't get your paycheck, not pay your rent or bills, and invest in something. So you always try, I always say, if it's possible, try to put 10% of whatever money you get away and have an account, whether it's with Schwab or TD Ameritrade or any kind of company that you can buy and sell stocks with. So they have all the information, a lot more than you do. You can talk to somebody at those companies. They're not going to charge you. And you can ask them questions about each and every company that you're interested in. And I do. And I ask other people. You know, I ask my friends. I look around. You know, the things, like I said, Jello, that was just just happened to be, you know, in my house, and I was using it. And there's so many things that you use in your house that you don't think about. Wow, these things are listed, whether they're listed under their name or they're owned by a bigger company, on the stock market. And you can look it up and then do the research to see what that company has done. The other thing I want to talk about is patience, because we all want to make money fast. Who doesn't? But when you're investing, you need to have an enormous amount of patience. Number one, because you need to find the right company for yourself, for your family. That's one. Two, you need to really look at that company and investigate it, like I was talking about. And again, the internet gives you so much information about a company. You can even ask specific information about any company, and the internet will most likely have the answer. So, you know, I really want everyone to do those things when they're thinking about investing. The other thing is, think about the amount of money that you make and the amount of money, let's say 10%, what that would mean over a year. And then what you want to do is you want to try and find companies that are making you over 10% return. And there aren't a lot, you know. Warren likes to look for companies that are giving him 15% return, which are even fewer, but they're out there. So you want to try and find companies that are giving you a good return yearly on your money, so that the longer you hold it, the better and the more money you make. And I reinvest all my dividends. I don't take dividends because if a company does give dividends, some don't. As soon as you receive the dividend, you're going to pay tax on that money. So let's say the dividend is $10, you know, whatever your tax rate is, you're not going to get $10. So I always reinvest all my dividends, so it builds back into the company that I'm investing in. Some of the other things that I talk about in terms of investing, patience was a major one. And the patience is really trying, it's learning about investing, its language, There are words that you may not understand, that you should understand what they really mean. And also taking the time to look at the companies that you're interested in. If you're interested in a company, don't just go out and buy it. Look at the company, watch it for a while. That's what I do. And then I wait for a good price. You know, we all like, as women, we all like to buy suits and clothes on sale. Everybody likes to buy stuff on sale. Guys like to buy tools or whatever they want on sale. And that's the same principle with investing. You want to buy a company that is cheaper than what it's worth, if possible, or what it's worth is fine too. And I just said company because most people talk about the stock market and stocks. Stocks are companies. So remember that. And that's why I say, look up the companies, investigate them as much as you can. And this is the main thing, you know, spending that time learning about each company, what it does, who's running it, how they think. You know, has there been one president for 20 years? Have they just recently gotten a new president with a new idea? All of these things really matter. Besides the fact, have they been consistently earning money over and over? I mean, of course, some years, 2008 and other years, nobody's company made money. But over the long term, you're going to see that really great companies. And you know, that's another thing. Look at companies that have been around, like Johnson & Johnson, for instance. It's a worldwide company. It's been around for over 100 years. Think of any companies that have been around for 100 years, even no matter what country you are in, there are those companies. And look at those companies and do what I'm talking about. Go online, look at their returns, look at their earnings, look at what they've done, because it's a good example if they're very popular and very profitable. Because that's what we want to do, is be profitable. The only other thing I have to say is that investing is really not something that's easy. You know, we can invest in ourselves. That's the easiest thing that you can do. And that's the thing I talk about the most. And at the end of almost every one of my speeches, I say, invest in yourself. And that's because learning about investing and learning about companies that you're going to put your hard-earned money into matters. And it matters over a long period of time. I remember years ago, when Warren, this is a funny story, but he was doing very well. He had raised, I think, almost $1 million, but he had raised $100,000 from each person he had asked, and he was managing the money and doing very, very well. But he was driving an old, beat-up VW. And people were saying, wow, is he a weirdo? Or, you know, why can't he afford a great car? But to Warren, and this is what I want people to, this is how you change your mind and about thinking, is for Warren, $20,000. He knew that he could take $20,000 and instead of buying a new car, over 30 years, if he could get over 20% return, that would be worth $9.9 million. And that's how he thinks about spending money. And that's how we should think about spending money, especially women, because our clothes are so expensive. A $500 sweater or $400 pair of shoes. If you think about that, take $400 and add 23% or 20% over 30 years and see how much that $400 will be. And you'll think differently about buying those expensive shoes. You know, you can buy, there's so many nice things out there now that you can buy that look great, but that aren't that expensive. So save your money, put aside money monthly, try and make it a habit. It's a good habit, even though it could be $10, but just put it away for investment. Have an investment account so that you could easily online and quickly buy something when the market goes down or when that particular stock goes down. And then look at the kinds of stocks and companies that interest you, you know, that you're familiar with. Like I said, you know, it was WD-40 or, you know, or whatever, you know, but there's a lot of products that are owned by bigger companies or by themselves that you may not realize are on the stock market and you can buy. And they're not that expensive. I mean, even banks, you know, Bank of America was at one point several months ago under close to $20-some. Now it's up to $36. So I wish I would have bought my WD-40 when I first thought of it, because it's done nothing but go up. It's a great company, and everybody uses it. So think of those basic things when you think about investing, because that is honestly what investing is. It's pretty basic. People always think that it's so complicated and nobody can do it. But with a little bit of knowledge, like I said, learn the language, understand what the words mean. There's plenty of books that make it very simple. And then once you do that, think about things in your life that you use, you know, and those might be some of the things that you look up to start to invest in. It's an easy way rather than thinking of a technology stock or other kinds of stocks and companies that you don't know anything about. Understand what you're buying and learn about it and believe in it and have the patience. Because again, 5 years, I've heard people say, oh yeah, I invest for a long time. 5 years. It's like, I invest for 30 years or 20 years. I'm getting too old to invest for 30 years. But my children, for instance, all of your children, you can be investing a small amount of money. And over 30 years, it can mean an enormous amount of money for them and for you. So with that, I wish you so much luck. Some of it's luck, but most of it's knowledge. So please learn what you're doing just like you do anything else in your life. When you're working at a job, you have to learn about the job, and the same thing goes with investing. And it's not that difficult. That's the main thing. Anyone can invest. And I want you to try to learn about it and be patient and be careful. And, you know, you can start with a little bit of money and then see how that goes and then grow. So with that, good luck. And I hope that what I've talked to you about has been very helpful. Thank you so much.